Hey everyone, welcome back to Crypto Cash. Thanks again for joining me here. I hope you're having a phenomenal day. We're focusing solely on the macro structure here today. Obviously, just kind of touching on the fact that we're up about 25% from bottom to top in about 48 hours. That's a pretty significant move. In most cases, that correction needs to happen, but I don't know if we're necessarily going to see that, right? We're going to look at some market capitalization here, specifically the larger time frames, and kind of identify areas of confluence. Some areas I think we're going to see some slowing pressure if and when that happens. And obviously, touching on some massive liquidation events that have been happening here. Records keep getting set. Interesting stuff here nonetheless. Be sure to stick around. We got a good one today. Let's take a look. Quick heads up, summer sale is live now. We got a 50% discount on all memberships available, which are already heavily discounted. Be sure to check it out. Link in the description below. All right, folks, let's go and jump into the backend data. And quick reminder, hit the like button if you could, please. Helps grow the channel. We've actually seen a significantly low amount of likes and or views. It's just kind of the way the market is right now, but generally speaking, I do appreciate it. Thank you again so much. Now, when we look at the backend data, it's pretty straightforward here, but simple way to understand it is that spot volume is still effectively much higher than that of perpetual volume, right? So it's basically one of those situations where when you see perp volume, high, that's one thing. It's kind of a false breakout in most cases. Spot volume has to be sustainable, has to be there in order for that to be sustainable, rather, right? So long story short here, we're in a position right now where open interest is low and spot volume is high. That's usually a recipe for disaster for those of you who are trying to short, right? And I say those of you, whomever you are, honestly, it's easy to want to try to short right now. I get it. That things are massively overextended. They should pull back. But we're seeing this very illogical behavior going on right now, and it's all the more reason why we're probably going to go higher, right? That's exactly why we're going to be looking at the macro structure. So not going to get too into the weeds in the lower time frames right now. There's tons of lower time frame patterns and different things that are happening, but bigger picture is what we really want to focus on. Where do we maximize our potential on longs, or where do we truly want to consider shorts now that we're here? All right. Just to preface and touch on this, I touched on this on social media, of course. In fact, you can kind of find that on my X account or Telegram, but basically been mentioning how significant this push is here and how much volume is flowing into exchanges. So we saw a big push on Wednesday, and then yesterday we saw a massive pump later in the evening. Asian markets are pumped. Same thing here today as well, with US markets open after another pump from last night. So things are just really on fire. Yeah, there's no other way around it. So when this happens, the best strategy, in my personal opinion, is to avoid trading and to not be one of those persons that consistently trying to throw money at the wall, see if it sticks. Right? Honestly, shorting is a bad idea. I don't care if it drops tomorrow to 60,000. It's still a bad idea right now. That's just kind of how it should be. Okay, so stop trying to catch those bangers and just maybe focus on risk management and using good risk tolerance, and ultimately just not trading. It's really the craziest kind of market right now. You're literally gambling every time you trade, and it's a difficult situation. So the main reason I'm saying this is just to kind of give you some food for thought. I mean, we've only been moving 2 days in the same direction. This isn't that outrageous. We see these things happen quite frequently in Bitcoin trading, as well as just crypto and currency in general. So just be mindful of that, right? This is nothing new, nothing spectacular. It's awesome, yes, of course, but we haven't truly broken those barriers yet. And those are things I want to talk about today. So all that said, quickly to preface there as well, with order books, we can see 80,000 is that next large outlier. We saw the same thing with 74,000 yesterday, where that level got hit, and now 80,000 is on the target, right? Same thing as well with 82.5, which is a point of contention for me. That's kind of a level I think is important. We're going to talk about that here in just a minute. Other than that, based on ETFs, essentially this week here, we've seen nonstop buying from ETFs. In fact, they bought pretty strong on Monday and Tuesday before things pumped on Wednesday, Thursday, and now Friday. Interesting coincidence? I think not. They know what's going on. We certainly don't. We're at least late to the party, right? In most cases. Anyways, well, I want to show this to you because the previous time frames we saw this kind of movement was when we were in the $80,000 range, right? We pumped from what, 78 to 81,000 in a matter of 2 or 3 days, which seems pretty small in comparison to recent here, right? But the key takeaway is that we're approaching our previous resistance range, previous range high, and that's the same thing that happened that time as well. We saw 3 strong green days leading into that push. Today, yesterday, and the day before could essentially be considered 3 strong green days if you exclude Monday and Tuesday, which were just them positioning, right? Market makers positioning for this next big up. So all that said, I'm not saying we're going to dump and come back down, but we want to be mindful that it's still a possibility, okay? So between now and whenever that comes to pass, I'm speculating that we're going to see 80,000. We've already saw 79.5. 80,000 seems very practical at this point. 82,000 is also a big deal. Okay, we're going to talk about that. Let's actually jump into the backend data, get a quick refresh here, and then discuss kind of what I'm talking about on the charts. Okay, now I know that some market moving as fast as it is, some charts aren't pulling up very well, but there's not much to really note. I mean, all liquidation has been fully swept, even on the 3-month time frame. All right, we go up to the 3-month time frame. Every single last ounce of liquidation minus late shorts is gone. Okay, so anybody who's taken a short in the last 3 months is now officially liquidated. Granted, those are probably low position trades that were held for a lot longer than they should have. Imagine being in profit from a short at 80,000 and getting stopped out here recently. Oh man, that's just, it chaps my hide to know that people still do that. Anyways, secure profits when you can. Obviously, it could be a lot bigger. I know it's it's a tough pill to swallow when you're like, oh man, I closed my Bitcoin long too early, and now we're way up here. I mean, I closed my long at like 67,000, thought it was a good call, right? Hindsight's 2020. I should be holding still, but that's just the way it works. Okay, folks. So try not to get mad. Don't cry over spilt milk. That whole thing there. Anyways, the key takeaway here is that we hit a high point of 55 billion in liquidation long delta. This is something I've never seen before. I track liquidation delta frequently, right? And that's why this is such a heavily manipulated situation, because generally speaking, you'll see over the course of a 3 or 4 day time frame, the liquidation delta hitting maybe somewhere in the range of about 20 to 40 billion. That's kind of like the big outliers. The most you usually see on a little push is 20 billion. The biggest I've seen is 40 billion in both directions. In fact, we hit 37 billion in that pullback back in June. To give you perspective, that was short liquidation delta. The reason why I'm mentioning this is because this is an obvious factor here that bulls are absolutely in control. Until it starts to taper off and we get that shift in dynamic, you should be careful shorting. That's really the bottom line. You don't want to try to short against this. So bulls are in control. There's no other way around it. You want to just be very cautious and careful. Okay. Touching on some market capitalization stuff here, crypto market cap for altcoins, excluding Bitcoin, stable, and ETH, is essentially up about 20% in the last 2 days, right? So altcoins have absorbed a pretty significant amount of market capitalization. That's a pretty big jump, right? That tells us in a lot of ways that altcoins are back on track. Does it mean that we're back on altcoin season? Not necessarily. It does suggest, however, though, that we have more propensity for further upside if Bitcoin doesn't dump on us, right? Bitcoin goes sideways, I think alts are going to probably continue to surge. It just makes sense. Again, they've been suppressed for so long. We got that shut up and take my money situation. I know I use that analogy a lot, but literally everyone's just throwing money at it, and it'll eventually come to a head, I'm sure. But between now and whenever the market starts to slow down, we're going to see altcoins continue to move. Okay, so I would keep some of your longs open. It makes a lot more sense to hold longs than any kind of short right now. Okay, as far as crypto market cap, top right hand corner here, this is basically just stablecoin. We see stablecoins down about 15% in the last 2 days, basically meaning that money's flowing strictly away from stablecoins and moving into Bitcoin and altcoins. Really, just everything's flowing in, so to speak. So until we see a shift in dynamic here and stablecoin dominance starts to increase, we're going to be in a position where the price is probably going to continue to run, right? Now, that's not the only thing we want to look for. Of course, there's a lot of other catalysts that we want to pay attention to, but from a larger time frame perspective here, in fact, let's go ahead and start with the monthly and just kind of recognize some outliers, right? And some areas of confluence. First of all, we got the 20-day SMA above the price at about 88,000. That's significant resistance in most cases, but if you know anything about moving averages, they're helpful, but they're not the only thing you want to use. Some people put too much emphasis in it. For example, the daily time frame. Some folks were talking about this level being the end-all be-all, and that we're just going to turn right around at 69,000. That didn't happen at all. Like, moving averages get blasted all the time. I more so like to use moving averages in combination with key level supports and resistances that have established themselves in the past, such as 82,000.6. 82.5 basically is a round number, right? That's a heavy area of confluence with our previous range high back again when ETFs were pumping the price to the 81,000 mark, and then they dumped on us a few weeks later. Okay. Having said that, we could very well be in a similar position. So until we reclaim 82.5 to say 83,000 as a round number, I'm not convinced that we're back on track. Because again, these moving averages mean very little if you don't have Confluence. And right now, Confluence to me is more so, range highs and range lows, not just some wonderful moving averages. Okay, now they are nice, they're wonderful in a lot of ways. You could argue that the price held above the 200-day SMA here, and that's all well and good, but that's not the reason why it held. Okay, that's not the only reason. Right. Once more, there's a lot of overextension things that kind of factor in, but strictly from a charting perspective, right now with what we're looking at, 83,000 is approximately the local range high that I'm looking at, 82.5 more specific. That's the level I think would be a much better shorting opportunity than trying to short right now and trying to catch that, falling knife, so to speak, whatever the inverse is there. So that's just kind of a level to pay attention to. We also do have, coincidentally, the 50-day SMA hanging out there on the weekly at 82,000, right? So again, Confluence, folks, you take more than one indication and use them in combination together, that gives you a better statistical favorability, right? So me personally, 82,000 is going to be where I'm looking towards considering a short. And if I had a long open, maybe I'll consider a long soon if things calm down a little. I would maybe consider a long from 77 to 82 as a rough estimate. That right now though seems pretty lofty. It's such a ridiculous market right now that it's very, very difficult to trade. Like, this is not the kind of trading conditions you want to trade in general, most cases. I know the bulls are probably rolling their eyes like, wait a minute, this is perfect. Yeah, you can take a long in any direction and be just fine with any altcoin. That's the truth about it. But from somebody like myself who prefers to trade with Confluence, there's no Confluence with this emotional behavior and the just consistent uptrend, right? So obviously, yes, take some longs, hedge your shorts with some longs, or don't take shorts at all. That's the concept right now. But the key takeaway I would say is to, limit your risk, trade less, and you're going to be much better off. There's going to be plenty of trading opportunities that happen in the future, right? Now, to kind of touch on some opportunities, just kind of give you some perspective, this is very identical in a lot of ways to this pullback we saw here, where I saw a 20% correction. How long was that? That went from, just give you some perspective, Sunday, May 31st to the bottom at Friday, June 5th. So that was roughly 6 or 7 days worth of trading. We take that same exact situation here. Looks pretty darn identical, folks. We're right there at the same top. So to me, 80,000 is also a very logical place for the price to kind of slow down and chill out because we've kind of hit that overextended state. The difference is we saw this same amount in 2 days versus what we saw previously in 5 to 6 days. So that's a pretty significant correction. All the more reason why I feel like it's more potent right now and that shorting is a bad idea. Right. So again, those are just kind of my thoughts here on where we're at. If you differ in opinion, please comment below and let me know. And there's no wrong answer or right answer here. Honestly, it's all speculation. But for the most part here, I think shorting it against this is a bad idea. If you look at hindsight here, when the price pulled all the way down, it took yes, it uptrend, but it took about 2 weeks for the price to recover back up to that false resistance or that local high of 67,000. Right. So while that was somewhat of a move, that could put us at maybe the midpoint 72K as a rough estimate, maybe a better case scenario. I personally don't think now that we've broken above 67 to 70,000, we're going to see that 50K range either again or for quite some time. We're going to need another fundamental catalyst to get us there, and we don't have one. Okay. Or at least there's none on the horizon just yet. All right. Those are my thoughts. What are yours? Comment below. Let me know. And again, if you want to become a better trader, cryptocash.tech is the site. Links down below. We'll look forward to working with you. Have a great rest of your day. Take care.